We gonna make it. 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 All right, people. What's up, people? It's beautiful Wednesday night. It's raining here in Harrisburg, Pennsylvania, thunderstorming. How's it where you guys is at? Hey, so tonight we're going to conclude the price action trading system, better known as the PAT system. I stress this. I said it plenty of times. This is a very easy way for a beginner to learn how to trade. It's very simple. You just follow the price, follow the indicators on the charts. You don't really do too much. You just follow the price. As I said before, this PAT system can be used in any market, stocks, forex, crypto, commodities, whatever. That's one of the advantages I think this has over a bunch of systems. And I want to emphasize this price, my PAT system is like everyone else's price action trading system. I said last night, we use a bunch of the same indicators and the same information. So everyone's system is going to be somewhat similar, but some of ours might vary because we might use a different technical indicator than the next man. But for the most part, price action trading is the same no matter you go around the world. All right, so like we said, last night we went over as if it's a range environment or a trending environment, and we said a range is when the price is stuck in between two defined points. It's a top and a bottom. That's why it's called a range. The example I'm gonna use again, I like using simple examples: $5 and $5.15. So say the stock of Samsung, my phone, if it's at $5 and it got up to $5.15, it went back to $5. That means that it's range trading. So it's stuck in between the range of $5 as the support, $5.15 as the resistance. And like I say, people, once you know the top and bottoms of a range trade, it is so easy to make money because you got predefined entry exit points. If you know every time the stock hits the price of $5.15, it's resistance. It gets pushed back. You put sell orders at 5.15. You usually go to 5.14 and wait till it come back down. You really don't have to just go at 5.15. So it's very important to know what type of environment you're in. Also, a trending environment, there's no defined tops and bottoms in a trend. A trend can just go forever, up or down. It doesn't matter. And I told you guys last night the way to follow a trend. I'm sorry, to see if it's a trend in about. Honestly, you can just stare at the chart and to see if it's a line. If it's a continuous incline, that's a trend. But we talked about the ADX indicator. Again, that's the ADX, average directional index, which means it just measures the strength of the trend. It doesn't care about what direction it goes in. If it's an uptrend or downtrend, better known as bullish or bearish movement, it just measures the strength. As I told you guys, on the ADX indicator, number 25 is like the cutoff, which means that any number over 25 indicates it's a strong trend. Any number under 25 indicates that trend is not really there, is more or less in the range. So that's like a very important thing, actually. You have to know if you're ranging or trending. You don't never want to try trend in a range environment because you will lose a lot of money, or try to range trade in a trending environment, especially if you go the opposite way. If you try to sell and during an uptrend, you're going to lose a lot of money. So it would behoove the average investor to know if you're ranging or trending. What else we went through last night? What is it? Trending environment, ranging environment. Um, Okay, the other part of the PAT system was support and resistance. And we kind of cover that with the range trading environment, the highs and lows. Like, again, people, simple wordplay. When you support something, you're holding it up. You resist something, you're pushing it back. I just think simple wordplay is the best way to be in this. Don't try to make it more than what it needs to be. So again, using a $5 price as an example, once the security hits $5, it keeps touching that price point, but it bounces back up. That is known as support. 5.15, it hits that, it gets pushed back. That's known as resistance. Now, a common theme is the more times a support or resistance is touched, the stronger it gets. So if it keeps touching the $5 price point and getting pushed up, that's a very strong support line because it keeps touching repeatedly. And also, once support or resistance get breached, it becomes the opposite, which means that so the price kept getting 5.15, it kept getting resistance, but it pushed through the 5.15, it got up to 5.20. Now 515, which was once a resistance point, is now a point of support. You understand what I'm saying, people? And it'll be vice versa. Once a point of support is breached, it becomes resistance to the opposite side. So say if the $5 price point was the support, but it got breached, so it went down to $4.85. Now $5 is now known as resistance because it's pushing the price back from the $5 point. So you always want to just keep it simple, man. Like I try to make my P.A.T system very basic. Like this is very basic stuff that a beginner can get. Like I say, the motto of Trader Dot, trading so easy, caveman can do it. So I don't want to make no one overwhelmed. But during last night's podcast, well, I should say live stream. I've been corrected. It's a live stream. During last night live stream show, I did a thing with candlesticks, and a lot of people inboxed me. They wanted to do another thing on candlesticks. So we're gonna get into candlesticks, but let me do the very last point of this P.A.T system. You know what I mean? So now the P.A.T system. I'm sorry, the pivot point. Pivot points are basically like lines of resistance, but they're support and resistance, but they're actually stronger. See, all right, so let me get my little screen share going on here, people. Give me a couple seconds. You know how it goes. All right, price action trading. And again, people, this is a book I wrote. That's more like a pamphlet because it's not really that many pages, like 15 pages. And it's really just my P.A.T system. That's all. Like again, this book is free. I'm not promoting. Well, I am promoting it, but it's free. You don't have to pay nothing. So I don't want you to think you gotta pay. It's really free, people. Honestly, just inbox me and there you go. I send you the book. And this is a very easy trading system to go over. Like I say, the P.A.T system. All right, so we had the second part of the system is the pivot points. Pivot points are created by using the previous period's open, close, and high divided by 3. Being that you're using the previous period, it doesn't matter the time frame. You can do pivot points on a minute chart, hourly chart, 15-minute chart, daily chart, yearly chart. It really doesn't matter. You just use the previous period. So whatever period you feel comfortable trading in, you want to use that period. But I also told you guys multiple time frame analysis. Multiple time frame analysis is basically using the different charts before you make your trades. Like I say, when you do like a hourly chart or 4-hour chart or a 15-minute chart, that's like a view like this. You're kind of focused in, kind of playing like Call of Duty, a first-person shooter game. Whereas you're on the daily chart or the weekly chart, you got a bird's eye view. It's like you up higher, you can see more. So you always want to do your pivot points on the longer chart first, on the daily or the weekly, then come down, because I tell you all the time, as I say here, you're able to use pivot points on multiple time frames, but the longer the time frame, the stronger the signal. Meaning, pivot points on the monthly or weekly charts are more important than those on the daily or the hourly. That's because on the longer time frames, the movements have more time to form, so they're going to be stronger. Because like yearly time, it has 6-7 months before it consolidated and making the move. So you always want to check the longer time frames before you make your trades on the smaller time frame, people. That's one thing I cannot emphasize. But yeah, pivot points give you strong signals if used correctly. There are the 6 points created by this formula. See, I don't want to give you too much information and confuse you guys about this formula. At the 6 points, basically it's the pivot points and 3 points of resistance, 3 points of support. That's why the 3 points of resistance, as you see, is R1, R2, R3. 3 points of support is S1, S2, S3. That's pretty much. I'm trying to zoom in, but I don't think I can't get it anymore. But yeah, I want you to see the pivot point chart I had. All right, so it's not letting me do that for some odd reason. But yeah, people. So the thing with these pivot points is they're basically support and resistance. They're just stronger lines, and actually, see, when you pivot, you know what the word pivot means? You turn. So a pivot point basically is a turning point. Once you get to a certain point, it's going to pivot. It's going to turn. It's going to go back. Again, people, pattern recognition, simple words. I cannot emphasize this enough in technical trading. Pattern recognition. You're going to start. You're just going to see things over and over and over. Honestly, you can start today and just keep trading. Keep paper trading. You're gonna start seeing the same signs over and over and over. About a week from now, you should have some type of thing, because you're gonna see the same thing over, people. You know, and basically, one thing about pivot points is you want to see if the price opens above the pivot point of the previous period. You got a good chance of that being a bullish day, which is an up day, which means the price is gonna rise. Likewise, if the price opens up below the previous period pivot point, it's a good chance of that being a bearish or down day. Now, again, this is not 100% correct. I'm sorry, it's not 100% set in stone. Because, like I say, trading is never 100% set in stone. There's always different possibilities. Excuse me. But for the most part, that's really, I'd say, 75% chance when the price opens above the previous period, the pivot, it's gonna stay above. It's gonna be an update. And also, like, knowing pivot points is an easy way to make money. Again, like I just said, the word pivot means to turn or reverse. When I'm facing forward, I pivot. I'm switching my direction. So if you see the price is downtrending down, when it gets to that pivot point, it's a good chance that pivot point is going to be in line of what, people? Support is going to hold it up. So pivot points are basically support and resistance, but it's like a stronger version of support and resistance. I don't want to say stronger, but I guess it is stronger. Yeah, it kind of is, because you're using the previous periods, where support and resistance are just price points on the chart where the price is being resistant or is being held up. Whereas pivot points, you're actually using price points from the previous day, and it's giving the lines of support resistance. So yeah, pivot points are pretty strong signs, and it just really don't make it more hard than what it is. Now, I told you the formula is you take the previous period's open, high, and closing, divide by 3. That gives you the pivot points. So again, if you want to know more about pivot points, go to Google and just Google pivot points trading or pivot point formula, because it gets real more in depth. See, one thing in my shows I try to do, I just try to give you guys the bare bones, give you guys a form so you're able to build on. Because I don't want to go too in depth. I can do a whole 2-hour live stream just on pivot points alone, because it gets deep like that. So again, I want you to know what a pivot point is, but how to find a pivot point: open, high, close, divide by 3. And it gives you 7. It gives you 7 price points, 3 resistance points, which is R1, R2, R3, 3 support points, which is S1, S2, S3, and then the actual pivot point. Of those 7 points, the actual pivot point is probably the most strongest price point, because, as I said previously, if the price opens above, which means that, let's just say a simple example, using $5 again. If the pivot point is $5 and the price of the stock opens up at $5.10, it's a good chance that's going to be a update, because it opened up above that pivot point. Vice versa, the pivot point being $5 and the stock opened up at $4.85, it's got a good chance that's probably going to be a bearish day, because it opened up below the previous pivot point. See, this helps us get into setting our watch list when we go to stocks. These are things that I actually use on my watch list when I we're going to go over that also. Couple lessons down the line. I'm going to build you guys up, get you guys some knowledge. Now, one thing I did want to go over, though, I had a lot of questions. We talking about these Japanese candlesticks, people. You guys know I love my candlesticks. So screen share's gonna come on. We're gonna get our candlesticks on again one last time. Now, again, people, these candlesticks are like pretty much half the battle of trading. I don't want to make it seem like it's that easy, but it kind of is. Once you know candlesticks, man. And again, now this is a chart I went and looked for you guys, and it tells you what the most common is. Hammer, doji, spinning top. That's kind of a doji. It's like a doji got more body. But then hanging man, shooting star, doji, they just inverted. As you see, these are bullish candles, which means they're up. So they're going to be found in the content of a downtrend, because the hammer. So when you see a bullish candlestick, the hammer, the doji, the shooting star, hanging man, whatever, or the pin bar, they're called bullish because they're reversing the downtrend. As you see here, downtrend, hammer came, uptrend, downtrend, doji, uptrend. This one is kind of its own. Likewise, the bearish ones, see, the hanging man is the inverted hammer or a pin bar. Like so the bearish candlesticks are pretty much the inverted bullish candlesticks, if that makes sense. They're just found in different positions. They're at the bearish ones will be found at the top because it's coming in the contents of a uptrend. So it's going to reverse that trend. So they're always going to be at the top of that trend. Likewise, the bullish candlesticks will be at the bottom of the trend because it's reversing a downtrend. So as it's slanting down, you're going to see doji, hammer, pin bar. It consolidates and it goes back up. So again, people, you want to know these hammer, the doji, hanging man, shooting star, and the doji. There's like you got gravestone doji, the dragonfly doji. You know, it's basically a T. The dragonfly looks like that's a T on the chart. Don't make it more hard than what it is, people. The gravestone doji, inverted T. The normal doji is a cross. It's just when you imagine this line here being in the middle, it's basically a cross. I cannot emphasize that enough. I'm sorry, it's right here. Doji. That's the doji. See, those are neutral or basic. But when you're in the context of a trend and you see multiple dojis, that means there's indecision. It means the trend is ending. And you know, like there's so many candlestick patterns. These are just the basic ones. I don't want to get you guys on too many of these because you guys need to learn the basics first. The hammer, I'm beating you guys' head, man. Pattern recognition. This is what technical trading is all about. The hammer, the doji, hanging man, shooting star, inverted doji. That's the basic, but they're very powerful. Then when you use these candlesticks and content with other parts of the P.A.T system, the signals become very strong. Like again, people, I say there's only two options when you trade: you buy or you sell. So if you got a 50% chance, like I always say, just to blindfold yourself and just hit buy, sell, buy, sell, buy, sell, buy, sell. 50% chance of success, 50% chance. So, but when you add the candlesticks, moving averages, pivot points, support and resistance, your odds increase greatly. And these are all very simple ways to trade, man. I cannot emphasize this. Like, so whatever trading platform you use, this information is done for you. You just click on it and put 20 put pivot points. It automatically comes on your screen. You put AMA, which is exponential moving average. It comes on your screen. SMA, simple moving average. Like these, so this the trading software you use is very good because everything is already pre-done for you. You just got to know what to look for. And the only thing you as a trader really have to do is just learn to read candlesticks. Everything else is done for you in the trading platform. Like I say, I use TD Ameritrade, Think and Swim, and when I use Forex, I go to Prime XBT. And like I say, all those things I just said is calculated for you. You don't have to do calculations. I choose to do them myself. I just like doing it myself. It just helps you learn it. When you do stuff by hand instead of automatically done, you just learn it faster. And so the only thing you as a trader should really learn is these candlesticks, people. I can't like again, we're gonna do a quick primer. That's the basics. That's a bullish. I'm sorry, that's a bearish. That's a bullish. This is a oh, I'm sorry. See, sometimes they're different, white and black. So on this one, this yeah, that's right. Yeah. So yeah. So the open, which means the price it started at is lower than the close. That is a down. That's an up day because the price rose throughout the day, which means that is a bullish candle because bull means up. Likewise, the open, then it closed lower. That is a bearish candle because the price dropped throughout the day. Like once you see candlesticks, people, honestly, that's like I don't know. I don't want to. That's how I trade. All right, let me clarify that. That is my opinion. I don't want to tell you what you guys should think because you're going to learn to trade on your own, and then you're going to formulate your own opinions. But in my opinion, candlesticks is the meat of trading, baby. This is what it's all about. Like I said last night, you could take off all the P.A.T system. You could take away the SMAs, the moving averages, the support, resistance, highs and lows, pivot points. Just give me a blank chart with candlesticks. I can just tell just off the top of the head. Pattern recognition. It's not because I'm a super great trader. I've been doing this for 12 years almost, 11 years. Pattern recognition. I cannot beat that in your head. That's what trading is all about. It's like you do it in life. Whatever you do the same thing repeatedly. You're gonna start noticing things before they happen. And I cannot emphasize that enough when you trade people. You need to learn these candlesticks. Again, we're gonna go with the hammer, which is a hangman. If you just see they're all inversions of each other. Like shooting star and a hammer, they're the same exact thing, but they take place in different contexts of the trend. If you notice the inverted hammer takes place in a downtrend. stopped. Downtrend stopped, never going up. The shooting star, which is it's the same thing as the hammer. It does very same thing, but it takes place in a different context. This takes place in the uptrend, which means it's a reversal. As you see, the shooting star came, never going down. Now, I wanna clarify something, point something out. These examples are kind of really easy. It's never kind of this simple. Sometimes, no, most of the time it goes like this. It'd be like a hammer, then a doji, then another hammer, then a pin bar. It'd be like 4 or 5 of them, and then the trend reverses. It's never just dial and that. These dial and that. It's never. I mean, once in a while it is, but most of the time when you stare at a chart, you're gonna see the hammer, then the doji, and then the pin bar, and another hammer. You're gonna see 2 or 3 of them lined up together, which means that that trend is definitely ending. You just need to know when to go on, to go long, and yeah. So I just think that you guys should learn candlesticks, and once we get to more advanced, we can go to the 2 candle patterns, the 3 candle patterns. And once you learn these, man, on top of the P.A.T system, you can run through these charts. It's like I say, I like to keep my chart simple because if you put a bunch of indicators on the chart, they're going to give you conflicting signals. It's like asking 15 people the same thing. You're going to get 15 different opinions. You're going to know which way to go. Same with these indicators. You put 10 indicators on the chart, you're going to, what the hell? I don't know what I'm doing. 5 going to say buy, 5 going to say sell, 5 going to say hold, 5 going to say, I mean, it's just going to confuse you. So, with the P.A.T system, mine, like I say, you can go to, just Google price action trading. It's going to be 1,000 different systems, but they all do the basic thing, people. Price action trading. You just follow the price. You just look at the price. You don't go to no fundamentals. You don't watch the news. You just price says it all. The chart is your friend and tell you what you need to know. And yeah. So, and in conclusion, people, that's the P.A.T system. Japanese candlesticks, support, resistance, pivot points, moving averages, the simple moving average, and the exponential moving averages. And yeah, those 5, man. You put that together. Oh, and the ADX indicator, because you need to know if you ranging or trending. So once you apply that to your chart, you should get a clearer picture. But again, if you don't ever trade, it's just like me speaking Japanese. So you're like, what is he talking about? I might as well be speaking Korean or something. So for our next lesson, anyone out there paying attention, you should go to like Owanda, OANDA. Matter of fact, I can do it right now. Let me get my screen share real quick. So I want to start doing practice trades. That's what we're gonna do. I want you guys to get a tip for forex. Still for it. Like I say, if anyone is free, we can start doing day trading during the day. I can show you guys how to trade. Let's see. You go to Owanda. That is OANDA. I use Owanda because like I used to use FXCM, but they ran into trouble with the law, so they lost a lot of money. They're no longer in service. So we don't use them no more. So Awan is pretty good though. Oh, also trading at forex or margin is high risk and not suitable for everyone. Losses can exceed investment. You notice they tell you that in forex, but not stocks. Because stocks, all right. So the thing about forex, it's very possible to lose money and owe the brokerage money. Whereas stocks, once the price gets to zero, it's done. You just go to zero. Forex isn't quite like that. So you would go to demo account, which is your practice account. See, I have an account with them also. So you go to demo account and just sign up the minutes. So name, email, username, password, your country, and this America, and this I agree. Hit the sign up. Now the things about unlimited virtual funds, so you could trade as much as you want, take as much losses as you need to. You know, and you trade in real market conditions with real prices and spreads. So you're trading in the real environment, but you're not using real money. So you're getting a real feel for the market, people. You're seeing how it goes up, how it goes down, how it moves, but you're not using real money. And also 5 trading platforms. I use my phone, my tablet, and my laptop. Obviously, I use them on 3. So Omana's pretty good. So anyone out there want to start day trading, people, I'm sorry, forex trading, that's what we're gonna do. You should go to Owanda and set up your profiles so we can start getting you guys experience. At the end of the day, that's what it's all about. Like I say all the time, people, I could talk to you till I'm blue in the face, and you blue in the face from listening to me talk. But if you're not physically day trading, well, I'm sorry, even swing trading, if you're not physically trading, you're not gonna get a feel for the market. Cannot emphasize that enough. I get so frustrated. People say, "How do you trade?" You go in the market and start trading. That's how you trade. You can read a million books, but until you actually step in that arena, your knowledge. Like a friend of mine, my man the Cannon, Tony C. You know how people say knowledge equals power? I say, well, actually, Cannon came up with that. He said that is a fallacy. It's not knowledge doesn't equal power. It's knowledge plus action equals power. You can have as much knowledge in the world, but if you don't go into action with that knowledge, what is it? It's like potential kinetic energy. You know, you can have as much potential. The rock can be at the top of the cliff for a million years. Potential. It's not. It's not doing nothing. Once it get pushed, that energy is kinetic. Now you're in the arena. So I use that in my trading analogy. You know, you guys can be the smartest person in the world, but if you're not actually in the arena trading, you're not gonna learn to feel for the market. You can read. I know people that take all kind of trading courses and read all kind of books, but then don't trade. So it's like you're kind of just wasting your time. The best way to trade, people. I'm sorry. The best way to learn how to trade is just to trade. Can't say it no clearer than that. So that's why I want you guys to go to Owanda.com, set up your practice Forex accounts, and we can start trading. Get a feel for this market. See how it goes up and down. You'll see Forex is not for the weak hearted. And like say, I'm gonna start doing some lives Thursday mornings, Friday mornings. That's towards the end of the week. That's when the stock market is kind of slower. I'm gonna show you guys how to set up a stock watch list. You know, this and that. Now, I want to emphasize, even though I'm doing my P.A.T system here, I'm gonna do a segue to my stock watch list. Now, you know how we talk about value stocks and good stocks, fundamental analysis. You shouldn't invest in a company if it's got bad fundamentals. And the thing about day trading is you only hold that stock for the day. So honestly, when I day trade, a lot of the stocks I day trade in, they're not profitable. I mean, they're profitable for that day, obviously, but they're really not good companies sometimes. So we got to know what you're doing when you day trade. That's not really for the faint of heart. So again, you want to day trade, technical analysis. Can't emphasize that enough, people. Like this system right here, this is kind of for like a day trading system or make money daily system. That's what it should be called. Now, if you're a long-term investor, you don't do technicals that bad. You go to fundamentals. That's what you stick. You stick to your fundamentals because they're more of a. I mean, you could do a short term with fundamentals, I guess, but fundamentals are more set up for the long term, whereas technicals are short up for the short term. But you're able to apply technicals to a long term chart, which means that like pivot points, you can do pivot points for a year, monthly, or daily chart. That's long term charts. Also, you can do support resistance for long term charts. You can do the SMAs, simple moving averages, and EMAs. But again, they're they're basically set up to be more successful for the short term trader because they're in and out, they're quick moves, grab and go, grab and go, grab and go. Whereas your long term, you just buy and hold. You just buy it and you just wait. And you know me, I go crazy. My personality is set up to day trade or the crypto market or the forex market. So on that note, people, I'm gonna beat in you guys' head. Pattern recognition. Pattern recognition. Japanese candlesticks. Doji, hammer, pin bar, shooting star. Now those all are the same ones basically, except for the doji. But the other three, the pin bar, the hammer, and the shooting star, they're all like the same, the same candlestick. They're just found in different contexts. Some are found in the uptrend, which signifies that trend is coming to an end. Now it's going down. Some are found in the downtrend, which signifies that downtrend is ending and it was going up. Like I just think people just they don't give themselves enough credit. You know, people pattern recognition. I'm just gonna keep you in the head with pattern recognition. That's what it's all about. You see the same patterns over and over, you'll start continuously just seeing them. On that note, people, we're about to close it down. Tomorrow's gonna be Thursday. Um, you know, what are we gonna do Thursday? I might have a business guest on here. I'm trying to find a business guest. If my guest doesn't come on, then we're gonna start Live trading tonight. I want my man Elmo, so I'm gonna try to get Elmo to come on as another forex trader, or Sanchez. Those are some good forex traders. You know, I like getting other viewpoints than my own, because you know, you start drinking your own Kool-Aid, you start thinking that you know everything. So I like other viewpoints that from his point of view, that is not from my point of view. And you start seeing things different. Like I said, I've been trading for 12, 11 years, 11, 12 years, and I still learn stuff new every day. That's why I like talking to other traders, because you can learn different stuff from different traders. So it's always a good thing to learn. That's why I like those two, because those guys are kind of bougie. Because I told you guys before, the most bougie people you're gonna meet, man, is financial people. People that trade and invest. They are very hard people to deal with, man. They drink their own Kool-Aid very, very good. So on that note, people, let's start this night trading. Let's get a feel with this forex market, man, because it's easy money out there to make if you guys want to get in that arena. If not, because on the people that don't want to forex trade, like I say, I'm gonna start doing day trading on the stock market Thursdays and Fridays. So people, we're gonna start live trading, you know, but it's gonna be with fake money for you guys. I'm probably gonna use my real money. Well, not probably. I am. I'm making real trades, but you guys are making practice trades. So I want you to get a feel for how it goes. And on that note, people, you already know what's coming up. The theme song. I get it ready. Yeah, I mean, it gotta be more better way to do this. I'm gonna figure that out. It's all coming off the muscle, people. So give me. I gotta work with me. You know, I'm teaching y'all. Y'all gotta teach me. But one thing I do want to say though, teaching these little live streams, I want to say I'm learning things, but I'm getting a better feel for the market myself, because I'm trying to find things for beginners, and I'm relearning things that I forgot about, or I just thought I was too smart to use. So we're actually teaching each other, people. Believe it or not, when you guys send me those inboxes and requests and questions, when I look them up, I'm like, oh shit, yeah, that's right, I knew that. So we're in this together, people. And always remember, man, it's all about repetition, pattern recognition, and I can't emphasize that enough. So remember, y'all gotta get in contact with Kiss. Kiss, come sponsor the show, baby. You know what I mean? I can't pay you, but I can show you how to trade. You know what I mean? I feel like that's a fair trade off. Yeah, man. We gonna make it, people. It's your boy Trader Guy starting off on this rainy Wednesday night, man. It's raining cats and dogs outside my crib. It's so loud. I'm surprised you guys ain't hear the damn lightning banging. But yeah, on that note, people, go to Owanda, OANDA.com, open up those practice accounts so we can start trading, people. We get a feel for this market. I don't know why you guys are scared to trade. Dive in head first. You're using fake money. On that note, your boy Trader dies out. Have a good night, folks, and stay dry. Man, it takes forever.